There's a reason most traders quit studying ICT. They start in completely the wrong place and just get buried in a sea of confusing jargon. So in this explainer, we're going to cut right through all that noise. I'm going to show you what ICT actually is and give you the one true foundation you need to build everything else on. Okay, let's get into it.
When you first look at a trading chart through the ICT lens, it is super easy to feel overwhelmed. All those lines, those blocks, the weird terms, it looks incredibly complicated, and honestly, that's often by design.
But what if I told you that underneath all of that mess, the core idea is actually, believe it or not, remarkably simple? That's the first big mental shift we have to make. We're moving away from confusing and towards simple. And from simple, we get to logical. Because that, right there, is the real promise of ICT. It's a logical framework that explains why price is moving the way it is. And by the end of this, I promise you're going to understand that logic. So here's our roadmap. We'll kick things off with the core idea behind ICT, we'll bust some common myths, and then we're going to build everything up from the absolute foundation, which is market structure and liquidity. And then we'll take that feeling of being overwhelmed and turn it into focus with a clear plan of action.
All right, so the first and most critical thing to get your head around is this. ICT is not a strategy. It's a completely different way of seeing the market. It really is a total shift in perspective.
So ICT, which stands for Inner Circle Trader, is a framework built on one huge idea. Markets aren't random, they are engineered. Price is delivered by an algorithm that's designed to be super efficient, moving from one specific point to another for a very clear reason. This isn't about retail chart patterns, it's all about how institutions move their money. Now this quote right here, it pretty much flips everything most of us have learned about trading on its head. Forget more buyers than sellers. The ICT premise is that an algorithm is running the show, and it only cares about two things: time and price. That's it, nothing else. And that algorithm actually has a name. It's called the IPDA, or the Interbank Price Delivery Algorithm. Now, according to the theory, this is the engine that drives the entire market. Its whole job comes down to just two things: seeking out liquidity and rebalancing areas of inefficient price. That's all. Remember those two objectives. Okay, before we go any deeper, we absolutely have to clear the air. There are so many misconceptions about ICT that lead people down completely the wrong path. So let's nail down what ICT is not. This is all about setting the right expectations. First things first. ICT is not a crystal ball. We are not trying to pick the absolute tippy top or the very bottom of a move. The goal is to find these high probability zones where institutions are probably going to make a move, not to be a fortune teller. And second, this is not about being glued to your screen 24/7. In fact, it's the total opposite. The whole methodology is about extreme patience, waiting for price to come into these very specific time windows, called kill zones, when all the institutional activity is happening. It's about precision, not how many trades you take. And finally, you can go ahead and get rid of all the clutter on your charts. Seriously, ICT is based on pure price action. We're learning to read the story that the candles themselves are telling us, not relying on some lagging indicator that just shows us what already happened. This right here, this is the whole mental shift in a nutshell. The typical retail approach is reactive, right? You're chasing price, you're fighting the trend, you see a pattern and you just jump in. The ICT approach is proactive. You wait patiently for a very specific setup, you understand the story of why price should move, and you trade with the big money. It's a game changer, moving from low to high probability thinking.
Okay, so we've cleared away what ICT isn't. Now let's start building what it is. And we have to start from the ground up. If ICT were a house, market structure is the concrete foundation. If you don't get this part right, nothing else you build on top of it will stand. This is the bedrock.
So what you're looking at here is a super important concept called a market structure shift, or MSS. You can see how price was trending down, making lower highs, right? Then, all of a sudden, you get this really energetic move up that breaks that pattern and makes a higher high. That break, that's the MSS. It's our first big clue that the trend might be changing, usually because the big institutions have just stepped in.
So how do we read this blueprint? Well, it's pretty simple. First, you just identify the trend. Are we making higher highs and higher lows, or the other way around? Second, you look for a break of structure, a BOS, which is when price just continues along in that same direction. But third, and this is the important one, you keep an eye out for a change of character, or chach. This is that first little warning sign that the music might be about to stop.
Okay, so market structure tells us the direction that price is going. But that just leads to the next big question, which is why? What's the actual fuel that makes price move in the first place?
So I'll ask you straight up, why does price actually go from point A to point B? We know it's not random, and we know it's not just pressure. It's being pulled towards something for a very specific reason.
The answer is one word: liquidity. And the easiest way to think about it is where the orders are. See, above every old high, there's a big pool of buy orders, mostly stop losses from people who tried to short. And below every old low, there's a pool of sell orders. Institutions, the smart money, they need to tap into these pools to get their huge orders filled without causing the price to run away from them. And here it is in action. This chart shows it perfectly. You see that clear old low labeled sell-side liquidity? Well, the algorithm, the IPDA, acts like a heat-seeking missile. It drives price down specifically to that level to sweep up all those orders. It grabs the fuel it needs, and then, and only then, does it reverse and go the other way. Price didn't just fall there by accident, it was delivered there on purpose. Now, let's be real for a second. If you've tried to learn ICT on your own, you have probably felt completely and utterly overwhelmed. It feels like this bottomless rabbit hole of new terms and models. And you know what? That feeling is totally valid. Let's talk about why that happens, and more importantly, how you can escape it.
This right here, this is why people quit. They try to learn everything at once. Order blocks, fair value gaps, the Judas swing, and they totally lose sight of the foundation. It's like they're trying to build this incredibly complex skyscraper without ever pouring the concrete. So I want you to forget all of that for now. Just burn this into your mind instead. Everything, and I mean absolutely everything in ICT, comes back to these two simple questions. Number one, what is the market structure telling me about where price is going? And number two, why is it going there? What pool of liquidity is it targeting? That's it. This is your entire foundation. Look, all this information is great, but it's totally useless if you don't take action. So let's end this with a simple, practical plan that you can start using the second you're done with this. This is what you need to focus on right now. Here's your checklist. Step 1. Open a completely clean chart. No indicators, no junk. Step 2. Just practice mapping out the market structure. Mark your swing highs and your swing lows. Step 3. Circle the obvious pools of liquidity above old highs and below old lows. And step 4, and this is the most important step of all, do not trade. Just watch. Observe how price behaves when it gets to those levels you marked. This is how you really build your understanding from the ground up. See, mastering this foundation of structure and liquidity is the whole key. Because once you can see where price is going and why it's going there, the next logical step is to understand how the institutions manipulate those levels to their advantage. So the real question is, are you ready to see how they use that liquidity to trap other traders? We'll dive deep into that in the next explainer.